Okay, let's have ourselves a look at what the market's been doing. It is Monday, June 22nd. There's some earnings coming up. How do I make this go away? Go away. There we go. There's some earnings coming up in July, so we'll start planning for that. Was it Thursday, Friday maybe? The market had a big drop. What day was that? The 17th. The market had a big drop. We were expecting, this is the SPY, the S&P 500. So I've been expecting some kind of sell-off and relief drop here on the S&P 500 since mid-May, expecting it to come somewhere beginning of May, and, now it's starting to play out. So just for the foreseeable future, I'm expecting the market itself to be down, which it is, and, then everything else is obviously red, but that's because the market is a reflection of all of these individual stocks. So it's not really a surprise to me that there was a big sell-off, and we could expect this to at least continue. Let's just draw something like that. What is that? Until like July 6th. It doesn't have to be that precise, but this really shouldn't be over until about July 6th. But when I'm looking for a when to buy something, it's right here where the 200 moving average crosses the Bollinger Band, and kind of tells me that there should be some kind of relief drop coming in the near future. And so a buying opportunity for a when is that going to happen is right here. And so now it's happening, and we're getting some good low prices on the S&P 500, which in my opinion is why all of the rest of the market is kind of low. I had said back in like December or January that on a larger time frame, we were looking for a when on Apple, and that when might happen sometime in June. And so then that when actually happened here on June 3rd. The crossover happened here, and so then Apple starts to sell off, which is what the entire market is basically doing. So, Apple had its sell off. It hasn't actually gotten into there yet, so I would expect more downside for Apple to at least clean up this inventory that was left unchanged down here. This needs to be fixed, I guess I would say. I don't really have a better way to phrase it, but there is an excessive push that happened here that got outside of what's an acceptable price range on Apple. And so psychologically, people are big into the profit. And at a certain point, those people say it's time to start taking profits. And as a prediction of that, it would happen in June, because it's crossing what is a standard deviation away from what's acceptable, and people will just naturally start taking profits. So, if there's some spook, some news catalyst, some event that happens that kind of sparks it off, then that's what'll be used to say that it's what happened. But I expected this to happen back in January, looking at Apple for June or the market for June. So here it is, and we're here today, and that's kind of what's going on. It's difficult recently to nail down a specific news event that could be called out as a catalyst for this, so I don't think that the news is really trying to do it, because typically they'll blame it on like the war or a tariff or some nonsensical thing that they can latch their teeth onto and blame it on. But because there's like a meme going on that says that this is the 43rd time that President Trump has said that we're 2 weeks away from negotiations, that the news can't really use that as a catalyst as a sell-off anymore, because you can only cry wolf 43 times before nobody cares. So they've run out of things to use as event-conducing sell-offs or buying behavior. You can't really tie like a headline to it. And so the only other thing to look at is that this is the when, that there's just naturally something that was going to occur here. There's nothing to really blame it on. There's no event happening that somebody would say that's the reason why, because none of it's really true anyway, and I generally just ignore it and just look for this crossover here to say it's time to start buying Apple. AMD's holding up well, so AMD's held up here. The when for that signaled it back here in basically June again. It just hasn't really influenced it down to, any reasonable buying area. So I would still expect that to be happening. That AMD isn't interesting to me. One, because it's way up here and just simply isn't viable. But two, I expect some massive sell-off to happen and some big weakness to show up. Right now, processors are very popular. MU is one of them, I believe. And so MU is really pushing. I think... Oh, this is Micron. What's the other one? Maybe Taiwan Semiconductor? What is that? TCM? TCM, Taiwan. How do you spell Taiwan? Taiwan? No. Taiwan Semi. Here it is. TSM. So TSM is also pushing. Processor manufacturers, semiconductor manufacturers are really pushing well and holding up well. That when it signaled the when that they should drop off, they haven't yet. But if we look back here on Taiwan Semiconductor, they had signaled a when in October, but it took it all the way to the end before it finally did start to sell off. Same with here, they had their when, and then it finally sold off. It said that it should sell off here, and then they pushed, and then they sold off. So I would expect the same thing to occur with TSM or Micron or AMD, where they're holding up, they're pushing, they're giving it that final rally, but eventually they're going to fold down, and we're going to see TSM at 400, potentially down to 370. And it's just going to be a natural move. It's going to be expected and just nice relief to continue to give it a viable chart. So somebody will take profit. I don't know who the first one out the door is going to be, but somebody will take profit. Somebody will look at this and say, here's the top, I'm ready to get out, and that'll start a big red candle catalyst, just like this one here, or potentially like this one here. So I'm not going to say this is the top, but it could be the start of it. And then when the 200 starts coming out of here, which it already did, then we would start to see TSM roll over, and then it capitulates a little bit, where as soon as it starts to roll over, then the people who weren't out here start getting out here, and then everybody else who found out about it late says, oh shit, I'm late. I thought it would keep running the way that this one kept running, and the way that this section kept running, and that this kept running, but it's not. And so then they sell out, and then it capitulates down, and we start seeing something like 400 down to 367. On AMD, that would look something like... Oh, this has already done it. Oh, no, that's ADM. What is this? AMD. So you would start to see it kind of capitulate out the way that this happened here. We really only have one instance to look at there, but we have this this massive push and gap up, and so it has this very large gap to deal with here. It pushes, then it signals a when, and then it comes down, starts to fill the gap, and then continues like normal, where it just consolidated across and did a bunch of nothing for, what is that, 11 to 4, so like 5 months. It kind of just consolidated sideways and then pushed. And so we're going to be looking for one of those again, where the target on AMD, which I don't know when it will happen, but it's already kind of said that it's coming soon. And so when this rolls over, somebody will sell, somebody will start taking profits, and then it'll fail to bounce, and it'll just climb right into here. But if it comes into here, which will be 445, potentially down to 321, if it comes into here, then they'll definitely go for this gap fill. So then you'd be looking for like 365 at least. That there's a lot of time to watch AMD and a lot of time to see this when play out. And then when it comes down, it starts getting into here, then you want to see it come into this gap fill before maybe entertaining the idea of buying it. But for now, you're just waiting on that. What did Apple do? So Apple hasn't gotten there yet. There doesn't seem to be anything to really target that you could start buying Apple now and start doing something sub 300 down to 280 is a pretty comfortable area. And then the half a standard deviation down is 280. So, if somebody wanted to start buying Apple, I'm not going to buy it yet. I'm going to wait for at least 280 and at least start getting into this this breakthrough of the 200 SMA over the Bollinger Band. And then I'll definitely start buying Apple again. I bought it not last summer, maybe 2 summers ago. Oh, that is 2025. No, it wasn't this one. I think it was this one, 2024. It was definitely in the summer though, so maybe it was last year. Maybe it was last summer. Buying Apple, and so that's kind of what we would be looking for is something, at least 280, because then we can get out of on the larger time frame, the 3-year 1 week, we can get down to at least a return to the mean on the large time frame at 277. So I would feel pretty good about 280, and anything sub 280 is then going to be sub below the mean on the 3-year 1 week time frame, which can feel pretty good. And Apple obviously has a history of climbing upwards. That anything we buy here, let's say we were able to get $260 buys, then by January of 2028, which will be, or 2027, which will be next year, what is that? 14, 15 months down the road, we'll be looking for something like 311. So 260 up to 311 would be a pretty good return on a very solid company like Apple. So that's at least what I would be waiting for, is something sub 280 on the current pricing, unlike today's pricing. If it drags out another month, that pricing might change, but if it happens tomorrow, it's going to be sub 280, and we're only $17 away from that, which is, what is that, less than 10%? It's like a 5% move, which isn't a whole lot. For this to drop down just 5% isn't a lot. So it's not a big ask to say that I would like to buy this sub 280. Amazon was looking pretty good. So Amazon is down. It is below the mean. It's about a half a standard deviation on the 3-year 1 week. Looks like it's got some room to move some more, that we may see this down to about 197. So anything sub 200, and what did I have that mark at? Sub 225. That, I'll just maintain that mark and say Amazon, anything sub 225 is going to continue to be a good buy. If I see Amazon sub 225, which is only off of it by, what is that, about 3%. If it has like a down day of 3%, which could realistically be tomorrow, then it immediately turns into Amazon buying season. So we could be looking into that. Amazon has earnings coming up July 30th, so we are about 5 weeks away from Amazon earnings. So something to really look for here is if we get some sub 225 buying availability, we have 5 weeks until like proof of concept happens, where you can buy it for 5 weeks, but they are going to tell you exactly who they are as a company at that time, and it's never been disappointing. It's not like they wake up on earnings and say we are a bad company. So, if it's a time to turn around and time to drag themselves out of the gutter where they're about to drop down, that time's going to be 5 weeks from now. And if not, then we'll continue to buy it. But you can see from the long-term chart, they don't have a lot of bad weeks. That, this is their longest stretch of a bad showing. What is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And on the 10th week, they blew back up. That, I would say Amazon is a really good opportunity here to buy and buy for the next 5 weeks heading into earnings, and expect that on that 5th week on earnings, they should show well and climb back up. Or, worst case scenario, it goes on for 12 weeks more and goes to the next earnings, but they've never had a section in 3-year history where they've gone for a full 12 weeks and not reclaimed at least back to the mean. So Amazon is definitely something I'll be buying every Friday until earnings on anything sub 225. Oh, Google is still too high. I really want to buy this. And Awen, it says that Awen is coming soon, but they've been such a powerhouse that this may not even pay out because their earnings came in so good and their growth has come out so good that I think they've just defined themselves a entirely new chart that this isn't even reachable anymore, because they were this kind of company before at 150s to 200s, but they've doubled who they are as a company over the last 2 years, that I'm not sure if this here is going to actually get filled in inventory, because they're just an absolute juggernaut right now. And not like, let's say AMD or Micron or Taiwan Semiconductor, where they are a severe beneficiary of the current hype and popularity of processors. Google itself as a company is just a global juggernaut. So if there was a time to buy, it's right now, because they just hit their when that was showing up in the early June. It's actually late May. That you're getting selling pressure down and profit taking, in my opinion, dropping it down here to 348. That if there's a buying opportunity for Google, it's now. That if you're ever gonna buy Google, now is the time, because this is the drop, like this is the dip. And again, earnings is coming up. We've got 7/23 earnings, which is about 4 weeks away. That if there's a buying opportunity for Google, it's now, and you've probably got about 4 weeks, and then we can see what happens after earnings. But if Google is on the menu, it's right now. So Amazon I'll definitely be buying on Fridays. Google I'll definitely be buying on Fridays. And I will be prioritizing Google. Just me personally, I'll be prioritizing Google because I really want to own a lot of Google. And this for me doesn't come very often, just because they've been such a powerhouse for the last, year and a half. That and this chart didn't look like this then. This full standard deviation away wasn't that far away when we were there in April of 2025. This chart was actually down here. It's just they've blown up so much that it's shifted the entire chart upwards. But this was not 1 standard deviation away at that time. So now, I think now is the time to at least acquire some Google. That I'm going to be prioritizing Google's on my Friday buys, along with Amazon, trying to lead into this earnings here. Meta is continuing to get beat up, and I have a lot of Meta, so I don't necessarily have to continue to average into this, because I already own so much of it that I'm not going to get a better price, and I already have enough shares of Meta that I'm satisfied with the amount that I have. And when this does start to climb, I'll be more than satisfied with the return that it's going to give me when it does decide to turn around. That I don't have to continue to buy this. It's kind of the same for Netflix for me. I have enough Netflix that I don't have to lower my average. I can just wait for Netflix to get out of the gutter and start climbing again. Oh, what is this here? Haven't quite reached that yet. But we're massively down. Netflix is down like a tremendous amount. It's coming down to touch this 200 on the 3 or 1 week, which essentially what this means is long-term buyers, people who have owned Netflix for years and years, are currently break even. That's basically what this line represents. It's the long-term average over 200. It would typically be a 200 day, but because this is a week chart, it's a 200 week chart. And how many is that? 52 weeks in a year. That's like 4 years worth of ownership. That anybody who's owned Netflix for more than 4 years, this morning they woke up break even, where they've been green since 2023. They've been in profit since 2023. They are now technically all, as an average, break even, which isn't necessarily a bad thing because we can just buy this, but I've already been buying it, so I don't need to actually buy more. My average is very good. Oh, so yeah, that's Netflix, and earnings is coming up. So if we're looking for a catalyst to turn Netflix around, it's going to be on July 16th, which is in about 3 weeks. So if there's some kind of announcement, some kind of CEO tells you something about the future of Netflix, that's going to happen on the 16th. I have had some reservations about Netflix, which is why when this initially happened, this big drop happened back in October, the earnings from last year, I had said that I am buying Meta and that I am going to buy Meta at a 2-to-1 ratio to Netflix, where I want twice as many Meta on my dollars spent as I do Netflix, because I had some reservations on Netflix. And my major reservation on Netflix is that they are not diversified. They are a streaming service provider, and that they aren't really anything more than that. They're, 15 years ago, they beat and basically conquered television from your legacy cable providers, because cable providers were getting too expensive. And, sure, everybody watched TV and they all watched, any given show that was on, say, Fox or CBS or NBC or ABC, TNT, TBS, all of the legacy channels that we grew up watching. Everybody would just watch them. And so their major income, revenue stream, was providing the monthly service through the cable, and that you would just pay your monthly bill, and that's most of what the revenue came from. The other thing that the revenue came from was advertising from commercials. And so I'm not sure what the... Okay, it's Fox. And where do I look at? I want to see their market cap is what I want to see. I actually don't know where it is. Let me turn all this stuff off. So I'm not really sure where their market cap is here. I would typically look at it on FinViz. But I know that Fox has a market cap of about $40 billion. So if we consider who Netflix is compared to 21st Century Fox, Fox has a market cap of $40 billion. Netflix has a market cap of $300 billion. So let's say that is 8x the size of Fox. Netflix provides a lot of entertainment. They provide a lot of movies, a lot of TV shows, a lot of entertainment value for what people like. But for me, my reservation on Netflix is that they don't have anything more. They are a bigger version of what CBS or ABC or NBC is. They're not confined to a single channel with a certain amount of shows that are played hourly for 24 hours, and you just tune in for your Tuesday at 6 o'clock, program that you enjoy. You can see thousands of those at any given time on Netflix, and that's where the market cap is larger, because they are more than their competition. But Amazon does the same thing. They have Amazon Prime. Google owns YouTube. The up-and-comer is Peacock. Peacock right now is who Netflix used to be, and so I can see a world where Peacock grows and becomes who Netflix is today. I'm not a big fan of Peacock. I think it's annoying to try and watch or try to navigate and try to find a show that I want to see on it. But that's exactly who Netflix was 15 years ago. You know, we used to pay $3.99 per month to watch Prison Break or Heroes. And as soon as you finished it, you know, you'd watch like all 12 seasons, you'd binge it out in like a month, and then you cancel your subscription. That's who Peacock is today. And that's what Netflix technically still is. They haven't become something more. Their competition is Amazon. It's Google with YouTube. It's Disney who owns Hulu now. And Disney bought Hulu and ESPN and Marvel and somebody else. So like that's who their competition is. But, you know, Netflix doesn't deliver packages through the mail. They don't have an e-commerce website where you can buy, you know, anything in the world that you're looking for, including now produce like fruits and vegetables, right? So, you know, if there was a comparison of who Netflix is versus who Amazon is, or who Netflix is versus who Google is, there's a reason that they are a $300 billion company and Amazon is a $3 trillion company. Netflix is a small fraction of what Amazon Prime Television is, or what Google's YouTube is, or what Disney's Hulu is. And then they also have Disney Plus now. So in my opinion, my reservations on Netflix are that they need to become something more. I don't know what that more is. I was hoping maybe it would be toys, like they did a partnership with Hasbro to start creating children's products off of their Netflix originals, like K-pop Demon Hunters or Stranger Things. But if I don't even know the symbol for Hasbro, but if we were to look up the entirety of what Hasbro is worth, they're worth like $5 billion. So even that addition to Netflix doesn't put them in the upper echelon of companies. You know, they're technically up there because they're 300 billion. You know, that's not nothing. But when it comes to the FANG stocks and when it comes to the Magnificent Seven, they are falling behind their peers. When they came out in like 2010, they were out earlier than that, but when like the FANG name came out, when Facebook, Apple, Netflix, and Google were named, and Amazon, Facebook, Apple, Amazon, Netflix, and Google, when they were named the FANG stocks back in like 2010, and then when they were named the Magnificent Seven, there's one company that's a little less magnificent than the rest. The rest have become multi-trillion-dollar, you know, corporations, and Netflix hasn't become something more. And so that was my reservation, which is why I was buying 2-1. When I was deciding where my money went on Friday, I bought twice as much Meta as I did Netflix, because Netflix simply hasn't diversified and become something greater than just a streaming platform. And I'm still waiting for that. I'm happy to own them, and I'm happy to own them at, you know, wherever my average is now. I know it's super low. And I know this line isn't accurate anymore. This 91, that's not accurate anymore. It's much lower than that. But I'm happy to own them and happy to see what they're gonna climb up into. And they should return to at least 150 minimum. So it's still a really great return. But I didn't buy them as heavily as I did Meta. And then I've recently been buying Microsoft, and I think this has been for maybe the last 6 months or so. I've been buying Microsoft on Fridays. So then it had been like Microsoft, Meta, and Netflix, and Netflix became the lesser buys of what I was doing because I had funneled some of that into Microsoft. Now, Microsoft has been getting beat up, you know, for a while, and I really didn't expect this at all. I didn't expect this to last more than 5 or 6 weeks, but it's lasted like 5 or 6 months. So I just continue to buy this because at the end of the day, this is still Microsoft. You know, they are one of the juggernauts in the world. So to be 2 standard deviations away on a 3-year, 1-week chart on Microsoft is absurd that I am buying this hand over fist. Netflix chart looks good where I say, yes, this is a buy, but this Microsoft chart is absurd that I'm just buying this hand over fist, buying everything every Friday. I've taken a back seat on buying Netflix because, with this drop here, what is this, 4 weeks here? This is, this was short-lived. This should be short-lived. I want more of this, that I'm funneling more into this than I am Netflix. I'll just hold Netflix and see what happens with it. But Microsoft down here, 2 standard deviations away is absurd. And earnings is coming up the 29th, which is like 6 weeks away. So, plan on something to happen there that's going to give this some kind of drive upwards. If we get 5 more weeks to buy this, that would be a gift, and I'll take it, and I'll just continue to buy Microsoft on Fridays. So leading into earnings, I do want to acquire Amazon. I do want to acquire Google. I'm still waiting on Apple to drop down some more, that I'm just going to, for the next 5 or 6 weeks, buy Microsoft, Google, and Amazon. Oh, who else do we have? I don't think Nvidia's really dropped at all. No, not quite yet. What's it look like on the 1 year, 1 day? Oh, we had some sub 200s here, which would have been nice, but I've been preoccupied buying other things that, again, that just happens to happen with me when it's Nvidia, is that I don't really get to buy it. I got like 1 week back here at like 165. I got like one good buy-in, and then that was kind of it. Anything sub 200 is still looking good. It's just it doesn't spend a lot of time down there. So when it happens, go ahead and take advantage. But if it doesn't happen, then I just buy Microsoft and Amazon and Google, I guess. And we can go ahead and take a look at Tesla. Tesla has been given enough time where it had like an explosive chart. Let me try to find a much larger time frame. See if I can get it to show up. Oh, I guess it's built out a pretty decent looking chart now, where, at the time, I think it was this candle right here, it exploded it upwards, or maybe it was this one. 2024 seems too long ago that I don't think that's the correct candle. But either way, it was very high at the time that it had happened. It just really wasn't buyable. And let's just pretend it was this candle. I had said this is going to have to trade sideways for probably a year before I can really start looking at it again and start making the chart make sense, because the chart was shifted so low from how far up it had exploded. So now it has been given enough time to consolidate sideways and build out at least a legible chart that there's the possibility that Tesla is buyable again. That we can start looking at this and saying sub 430 is a good buy on Tesla. Sub 410, sub 408 is a good buy on Tesla. So anything under 408 is a good buy. I happen to own a shit ton of Tesla that I don't have to jump in this right away. I don't have to try and like jump all over this 340 price here, or what was this, 381. I don't really have to jump all over this, that I can be very patient with Tesla, because I already own it, and I own it from so far back that it doesn't even matter if I ever have to buy Tesla again. That I have so many shares from back here that I can just be a proud owner of Tesla for the rest of eternity and never think twice about it again. But as far as today's pricing goes, this is a good price. And if somebody out there wanted to acquire some Tesla, anything, let's say sub 405 is probably a good price, which also happens to be the price we're at right now. Anything sub 405 is a pretty good price on Tesla. If I remember correctly, there was a $75 candle. And so if this is 350 and that's like 400. So it's possible that this was the candle that broke the chart. But if there was something to look back on, it was a $75 candle that had shifted the entire chart. that if we take a price from past that we were happy with, and it would be somewhere in here like 280. If we take the current price today and subtract $75 so that we can remove that massive shift upwards, this puts us at 330. And so if we were happy looking at a chart today that was a price of 330, then suddenly it's viable. And I would say that if I was imagining a price back then that would be today's price at 330, I'd say that's a pretty good price. That, it's just like a small translation thing, but it's kind of building out its own legible chart that we don't have to do that anymore. But for a while there, we had to just subtract $75 and then try to imagine it down here, where this would be like this drop here is 387. And then minus 75 would get us to like 315. And so then we would have to look back here and say, oh, well, wow, 315 on this section here is actually pretty low. That sounds viable to me, because this is technically 315 if you take away that massive candle of $75. And that massive candle is actually when Elon Musk had sold a bunch of shares to acquire Twitter. And then, like 2 or 3 years after he acquired Twitter, he made all of his money back. And so then he took all of that money that he had sold out of Tesla, and he just bought his shares back. And so that's what that $75 massive green candle is when Elon had bought all of those shares back that he had sold 2 or 3 years previously in order to acquire Twitter. So he made all of his money back, and then took that money and rebought all of those shares that he had sold in Tesla. But it shifted the entire chart to where it wasn't really legible. But all of this pricing here minus $75, which makes this 341 minus 75 is like a crazy good price. Where if somebody was buying these at 341, that pricing minus $75 is a great price in 2026. I wasn't really looking at it, but that is a great price for Tesla if somebody had the opportunity to buy that. And what do we have going on in MSTR? MSTR is kind of going through it right now. They are tied to Bitcoin, which is backdash BTC. So Bitcoin is down, and therefore MSTR is down. It does look a little bit like there's a when happening here. So if we tried to project out when Bitcoin's going to try and take the turn and say that we finally bottomed, when did this start? November of 2025. This big drop off here was told to us back here. And so then this big drop off happens. Who knows when it's going to end? But right now it's 1.5 standard deviations away that Bitcoin is just down massively. And 1.5 standard deviations away from the mean is just a huge drop off. The when appears to be happening, and the upside is going to be something like 105, call it 106,000, and then up to like 120. And if you're going to go to 105 and you're going to go to 120, then of course you're going to go to new all-time highs. Like you wouldn't buy all of this. All of the buyers in the world come in to buy all of this. They get it to turn the boat around. They start climbing back up, and then they get to 106. They're not going to stop here. They're at least going to get to 120. But if they get to 120, then they're not going to stop there. They're going to push for all new all-time highs. So I would expect something, let's say, out here, that the price target on Bitcoin is going to be about 140,000, roughly. And that's just at the end of 2026, which is going to be 6 months from now. Can this turn the boat around if it does something like this? Can it turn it around in that time? Maybe not, which means you're looking for like 150 by like April of next year. But buying here and then climbing upwards and reaching for that 150 by next year, by April of next year, is a pretty good return. So I would expect that. And then if if this is kind of showing a when here, we'll try to figure out when that's going to happen. It's going to be like really, really rough, bullshitty math, but we're dealing in weeks, so it doesn't have to be that accurate because, if I say 1 week, then what's the difference between 1 week and 4 weeks? It doesn't have to be that accurate, but let's say that we reach the halfway point around here. What is that? 1, 2, 3, 4, 5. That I would expect 5 more weeks. So call that 5 weeks, and then plus or minus 5 more weeks, right? You could call it 10 more weeks, or you could call it tomorrow. Who knows? It definitely won't be tomorrow though. Like there's no way that this closes in a tomorrow type of deal. But either way, call this 5 more weeks, and then this starts to make its turnaround and starts to get back on the horse and out of the gutter and climbs, back out of here. And what is that? 62,000 up to 150,000. Like 2.5, 3 times return. Yeah, like double and a half type of return looking on Bitcoin. And so then if we look at MSTR, it's going to be the same concept. They essentially follow Bitcoin more or less. They're kind of going through it right now where all of the news and all of the FUD that is related to MSTR and what they're doing isn't looking favorable on their price, but they do essentially follow Bitcoin, that if Bitcoin goes up, they will have no choice but to follow. That if Bitcoin is going to roll out of here in some time between now and 5 weeks from now, MSTR will follow. And, you're going to be looking for at least a return to the mean, which is going to be MSTR 300, just roughly call it 300. So middle-ish term target is going to be that 300 mark. But again, it follows Bitcoin, and if it's going to do that, then it's going to go for an all-time high. If it's going to go to 300, let's say it breaks through here and it gets to 250. It's not going to stop at 250. It's got to go to 300. But if it goes to 300, then it has to go to 417. And if it goes to 417, nobody's going to stop here at 417 and say, oh, well, guys, last time we got to 455, but this is a good stopping point. It's not going to stop at 415. It's going to at least get to new all-time highs, and that's going to be something like 532. But then you've got this entire giant wick right here that it can't stop at 532. It's got to go to at least 550. So I would expect 550 minimum out of MSTR, which is going to be a 5x return. Whatever you buy in it here, whatever your average ends up becoming at MSTR 109, you're going to be looking for an upwards area of 550. Will that happen in 5 weeks? Absolutely not. But will it happen as soon as it gets back on the horse? Yes. So that target, roughly coming out of its bearish sell-off that we've had here back in, what is that, July of 2025, or I think it was October on Bitcoin, the October rollover. If we were to plan this out, it would be that 5 weeks from now, we want to get out of this gutter and at least come up to right around there. Yeah, that was pretty close. So you're going to want to see it come out of here, and I would aim for something like February. What is that? 350. Yeah, call it 350 by February would be the general plan. And then if it's going to get to 350 by February, then you expect it to just keep climbing upwards, and you're going to be looking for like 480 by September of next year. So then that 550 target that I had talked about. I mean, you're not talking about September of next year. You're talking about January of next year. So an entire 18 months from now. In 18 months, you would be expecting to find new all-time highs on MSTR and new all-time highs on Bitcoin. That'd be like the rough planned idea is in 5 weeks, MSTR should fully turn around, Bitcoin should be fully turned around, and should start to climb and start producing higher gains. And then from that 5-week period, we just start climbing up, and we want to see 300 by September, or 300 by February, and what was that, like 450-ish? I already forgot the numbers, but 450-ish by September of next year, and 550 by January of next year, 18 months from now. So that's kind of what MSTR looks like, is that you want like a 5 to a 5.5x return on whatever it is that you're investing in here, but that by time it comes out of it, you're looking at 5 times return. And this is kind of the appearance that Tesla had for me, like 5 years ago at this point, or AMD had for a couple of us. Was that, I think that was last year, maybe. What is AMD? These prices. What was AMDL at that time? Yes. That would have been April of 2025. And so I think we started buying in maybe like November of the prior year. And we bought for like 10 months, and then it gapped up, and then we sold here in that October. This look here on AMD and AMDL from a low of $277 up to a high of $25 is, that is game changing, where you start buying in here and you just go for the big long turn, and it might take 10 months, it might take 12 months, it might take 18 months, but when it does take that turn and it does start climbing, then you're looking at going from $3 up to $25. What was Tesla and TSLL? Oh, no, it was farther back than that. I believe it was this one. It was like 2021, 2022, I believe. So this is, it must have been this 2022, 2023. So that would have been 3 years ago, 4 years ago. And it just had this massive cratering sell-off. And then, what did it look like on Tesla? Yeah, 101.81 in 2023 January. So they had this drop off of earnings. I remember it because this is what I had bought, was that it had this drop off on earnings, and then I think this is when Elon had sold a lot of shares to acquire Twitter. So that's November, December 2022. It had this giant drop off. And I remember when it was added to the S&P 500, it was like $150. It should be in here, where in 2020 there was an announcement that Tesla would get added to the S&P 500, and then it had this massive spike because the S&P had to buy it, the NASDAQ had to buy it, and all related ETFs and holders that try to reflect the S&P 500 and the NASDAQ had to buy this. And so there was just a massive, massive buying. And there should have been no possibility for Tesla to ever drop below $150 again. Like, it just simply shouldn't have been possible. And then that's when this happened. Elon had sold a lot of his own shares that he had locked away and released into the market, and that's what made it possible to drop below 150, and that's what I had bought. And I bought this to like, I think it was like May or April, if I remember right. Yeah, so this is May of 23, and when it finally came out of this on its own merit, it came out of this, people bought it and brought it all the way back up here. So then on its own merit, it climbed out of this sub 150 up to here. And then in 2024, Elon bought his shares back, which then skyrocketed the entire chart upwards. Because on its own merit, it climbed out of that gutter, and then Elon got those shares back out of the market, which pushed it way up here. And then obviously we have the fall off, and then now we have a natural chart. But either way, if this instance here that's not even the instance, it's 5 years away. Here, this instance happened, and on TSLL, it was 464 at the very farthest low. And then we are now at present day at 1347. But at that time it was like, $20. So 5 up to 20 was 5x return. On AMD, it's essentially the same thing. AMD L. And we don't need the 5 year. We need something shorter. Something shorter. We needed it a little longer, but that's all right. So then we have this kind of chart where we had lows of almost $3. It was 277, and then it climbed up to 25. That's like a 9 times return. But essentially, that's what MSTR is currently. That if there is a present day opportunity like Tesla or AMD, it's going to be MSTR. I'm not exactly piling into this, but I am acquiring shares, and I've been acquiring shares since January, and I have been selling calls off of it so that I've lowered my average, my, what do they call that? My cost basis. I've lowered my cost basis to effectively 0, where everything I own in MSTR doesn't cost me anything at all because I've sold so many calls and gotten so much money back out of it that now it's all free to me that I can just hold this and let it try to happen. So MSTR here, I've been buying since January, but everything that you could acquire here has the potential to become what AMD did for us last year or Tesla did for me 4 years ago. I would say just start buying this. You don't have to like go crazy on it, because if the return does play out the way it's supposed to, then the return's going to be crazy enough on its own. It doesn't need any extra help. So, if you just acquire some, whatever you think some is, however much you think that amounts to, just acquire some of it. And if this does come out of here, it's going to be like orders of magnitude higher than, any returns that you could hope to get on something else. So on MSTR, that is currently 109, and you could buy it, let's say like sub 145, and that's going to be MSTU. And I don't know how far this has deteriorated. Like, I honestly don't. I don't know. I don't even know if that 315 is a proper and correct price today. But if we were to look at something reasonable, which doesn't even seem reasonable, like it seems absurd, but 107, where you say everything you bought for sub $3, you're going to sell at $100, which is genuinely an absurd return. That you don't have to buy a crazy amount here. You just have some of it. And I mean, let's say you bought $1,000 here and you end up with, I don't know, I'm failing at that math horribly. That's like 10x, 30x, call it 40x. So $1,000 becomes $40,000, and you say, congratulations, it cost me effectively nothing. That if you just have some of it, just a little bit, and you just let it run, then that can be like game-changing amounts of difference. If you buy 1,000 or 5,000 or 10,000, then you could be looking at, what did I say, 40, or I'm really failing at this math right now. like 200,000 or genuinely $1 million, just off of this single moment. And it's the same moment that happened for Tesla, and it's the same moment that happened for AMD, where you just get in what you can a little bit here and there. You can still do the safe, really comfortable things like Amazon, Google, Meta, and Microsoft and Netflix, when they're low. But if you just get something, just just some amount into MSTU, and then just let it run. Eventually, Bitcoin is going to turn around. It doesn't really have a choice. And when it does, MSTR will follow, and therefore MSTU will follow. And the multiplier of what MSTR will do compared to Bitcoin, and then what MSTU will do compared to that, means that if Bitcoin goes up 10% tomorrow, like let's just pretend tomorrow what happens, Bitcoin goes up 10%, then MSTR is going to go up like 35 or 40%. And that means that MSTU goes up 80% or 90%, because this is 2x of MSTR, and MSTR is 1.5 of Bitcoin. So you just kind of stack multipliers on top of themselves and say that what is Bitcoin at right now? 63, call it 64. So 64,000. If you add 10% to that, it gets us to 70. And if we look at a previous 70 price, it's right here, and that is going to be June 1st. So a move from 64 to 70 gets us to June 1st. And then if we look at MSTR, the June 1st pricing, where is June 1st? Here it is 150. So we move from 110 to 150. And then on MSTU, that means that you move from, where is June 1st? Right there. You move from $2.70 to $5.50. So it multiplies on itself, where this is 2x of MSTR, and MSTR is 1.5 of Bitcoin, roughly. That it's easy to see how this could just become extraordinarily higher than expected very, very quickly. And just sometime between now and 5 weeks from now, Bitcoin's going to take that turnaround. That if sometime between now and 5 weeks from now, you get $1,000 or $5,000 of MSTR or MSTU, and you just leave it there and say, I'll see you when you return, then I can't really see it as a bad thing. So yeah, that's it. That's kind of everything I wanted to cover, and I didn't really plan to talk for an hour, but apparently it's been 57 minutes, and yeah, that's it. That's all I got.